If you're panicked or depressed, you've got to think, well, where is the world headed? Is gold and silver, are they a crisis hedge? Are they a chaos hedge? Do you think that the world is headed toward chaos? And I believe we are overdue for a crisis. So take crisis multiplied by chaos. And that's where we're heading. And I believe that we are headed for far greater gold and silver prices. And what I am looking to do is to be buying silver at these prices and converting them to gold down at these prices, because it's going to revisit that area one day.
The precious metals market has experienced significant fluctuations recently, with gold and silver prices displaying notable volatility. Despite gold's traditional role as a safe haven asset, its price has recently declined, puzzling some investors given the current climate of economic uncertainty. Gold reached a record high of $2,484 per troy ounce in mid-July, following a sharp $200 increase from late June. However, the market has since been corrected, with spot gold trading at $2,371.23 an ounce in recent Asian trade. This pullback comes despite rising risk aversion, which typically favors gold. Mike Maloney, a respected precious metals expert and founder of goldsilver.com, maintains a bullish long-term outlook on gold and silver. Maloney identifies critical support levels for gold at $2,300 and $2,000, suggesting that a breach below $2,000 could signal potential trouble for the market. The Federal Reserve meeting and Chairman Powell's statements will determine gold's near-term trajectory. Any hints of potential interest rate cuts could bolster gold prices. However, a new report from the World Gold Council is expected to show decreased central bank purchases, potentially removing a significant source of support for gold prices. Silver markets have also shown volatility, with initial rallies followed by pullbacks. Maloney, known for using the gold-silver ratio as an investment guide, notes that the current ratio of around 84 and 85 suggests silver may be undervalued relative to gold. Investors are closely watching the dollar's performance and awaiting further cues on interest rates. The recent correction in gold prices may be attributed to profit-taking following the July highs and overall commodity market volatility. Please tune in for our exploration of Mike Maloney's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
Here is the gold price over the last 6 months, and you can see that it's been in this range between just under 2,300 up to just a breath away from 2,500, a high of 2,482, 2,483. So that 2,500 is a big psychological barrier. And when it gets past that, I do think you're going to see a lot of buying. But we just recently saw all of these all-time highs. This high in gold was accompanied by crickets. There was no rush toward gold. So there was basically everybody was sort of ambivalent, all-time highs. And you've got to realize the world that we're living in now. Look at the wars. Look at the central bank accumulation. Look at the financial chaos that seems to be going on, where everything seems to be going up and down at the same time. And then take a look at the political situation. Have you ever seen, I was born in 1956. I have never seen an election cycle this crazy. It's everything in the world is just turned upside down and nuts. And gold and silver are the ultimate safe haven assets, and they are coupled. When gold goes up, it will drag silver with it, period. And there's no big damage that has been done to gold whatsoever. And so the thing to watch is the gold-silver ratio. Here it is at 84.85. So we are a breath away from 85. So, I watch it's easiest for me to watch this on my own website. It went up 2.848%, which means silver's value as compared to gold fell by that amount, meaning silver is more of a bargain. And I use this for my buying guide. The gold-silver ratio is my personal buying guide. And so all I see here, until some severe damage is done with gold, and we would have to see it, let's take a little bit longer view here. I'm going to go back 1 year. You know, if it breaks 2,000, we're in trouble. 2,300 is a real good support level. If it breaks 2,000, then maybe we're in some serious trouble. But there is a lot of support in that 2,000 region. I would not expect it to be breaking that. And then, but see, I am in this for the long haul. I am a long-term investor, not a speculator, not a trader or a gambler. So I am watching that gold-silver ratio. And so here is the gold-silver ratio, and stock charts has not yet updated today. I'm making this on the 25th. And so I put this just a whisker under 85, right where the gold-silver ratio is. And as, you know, to get a real perspective, the big picture, you've got to take a look at how much of this line is below that blue line and how much is above, and how rare it is to be able to buy silver at such a bargain compared to gold. And then just remember that gold drags this all over the place. So if you're panicked or depressed, you've got to think, well, where is the world headed? Is gold and silver, are they a crisis hedge? Are they a chaos hedge? Do you think that the world is headed toward chaos? And I believe we are overdue for a crisis. So take crisis multiplied by chaos. And that's where we're heading. And I believe that we are headed for far greater gold and silver prices. And what I am looking to do is to be buying silver at these prices and converting them to gold down at these prices.
Silver markets have experienced significant turbulence, with prices plummeting to $27.50 before finding support. This dramatic movement, which MikeMaloney aptly describes as a silver smackdown, underscores the metal's notorious volatility. Maloney points out that such price swings are characteristic of the silver market. He notes that silver often behaves as a leveraged version of gold, typically moving 1.5 to 3 times as much as its yellow counterpart in either direction. This amplified movement can create both opportunities and risks for investors. The recent sell-off in silver can be attributed to several factors. Despite stronger than expected U.S. GDP numbers, which could potentially boost industrial demand for silver, market sentiment appears to be dominated by panic selling. In times of broad asset liquidation, silver is particularly vulnerable due to its smaller market size and the large contract sizes in futures markets. The influence of algorithmic trading adds to the market's volatility. Computer-driven sell programs can exacerbate price movements, leading to a sell-first, ask-questions-later mentality, intensifying downward pressure on silver prices. Let's get back to the interview.
Today, trying to find an equilibrium. But I want to point out, you know, everybody panics on a down day like this. Nobody panics on an up day. There's a big up, unless you're short. There's a big up day there, and it's much less. So this is 6 months of information. There was a bigger down day right here. So we've got a big up day, a big down day. Silver is basically leveraged gold. So if gold goes up a certain amount, silver will go up 1.5 times the amount, 2 times that amount, 3 times that amount sometimes. But it's got the same leverage on the downside. So a lot of times silver investors get panicked or depressed, but you're less likely if you're an investor and not a trader. This is the type of thing that where traders lose. Investors, you don't lose until you exit your position and you exit it and lock in losses. So let's take a look at some of the fundamentals and see what's underlying all of this. So this is Shanghai Gold Futures. This is from Nick Laird at Gold Charts Are Us. And what you see, so here is the gold price, and we're talking, 400 renminbi, I guess, per gram, I think it is. And then there's this plateau here that we've had over the past 4 months, which is great. But we want to take a look at open interest and the volume. We had about 180,000 contracts. This is in thousands, so 180,000. And we're poking our nose over 400,000 contracts, so more than a doubling since 2022. And you can see that lately this is very high. But let's look at silver. This is the Shanghai silver futures, so the Shanghai exchange. What I'm showing you here is the Chinese have your back. Gold and silver are pushed all over the place by the commodities exchange in the United States. When it goes down, the Chinese are buying. But here we have silver, and first look at the open interest, how many contracts there are, and you're talking about 650,000 here, and we're up at over 900,000 here, 920, something like that. So it's significant. But look at this volume, what has happened in just the past 4 months or so. This is since the beginning of the year, 2024. So this is about 3.5, 4 months, and the volume is way up compared to what it used to be. So, like I said, the Chinese have your back.
Considering the potential influence of upcoming Federal Reserve decisions, economic data releases, and the impact of algorithmic trading on market dynamics, do you foresee a continued upward momentum for gold and silver, or should investors brace for further corrections? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.